Okay, so in this video, we are going to go over an aggressive strategy. Now, before I told you that you want price to go below this 50 moving average on the daily chart. Now, how can you go short when the market is above the 50 EMA on the daily chart? Now, there's different ways you can do it. You can draw a trend line on a daily chart. So let's draw this line right here. I remember I had this line right here. And you can look for the swing highs and swing lows. So let's give you a good example. So right now, let's say the market was going down, and let's say price was approaching this trend line, right? And you want to see if you could get in. This would be an aggressive strategy because price is above the 50 EMA. Now you would drill down to the 4-hour, and you would go to the 50. You would go to the trend line, right? So let me. Okay, so this is when price hit the trend line. So what do we see? Only thing I see right now is an engulf right here and another engulf right here. And I do see a 1, 2, 3. So if, like I said before, you want to stick with the 1, 2, 3 first. I like trading it because it's, to me, it's a little bit more confirmation. Because if the market goes down and it tries to go up again and it's so weak, and it's too weak to actually go up and make a new high, to me that's a good indication that the market will continue to go down. So what we see is when the market hit this trend line, we had two engulfs, but you could have got in at this 1, 2, 3. So the market went down. Let's do this real quick. The market went down, went up, and went down again. So this would be the 1, this would be the 2, and this would be the 3. And as soon as it breaks the 2, guess what? Boom, you can go in and ride this baby down. And this is how you can actually get in when the market is above the 50 moving average. Only when you see resistance on the daily chart. So if you have a trend line and the market is reacting to that trend line, you can actually get in, drill down to the 4-hour, and get in, right? And you can also use the swing highs. So another good example would be, let's see, these swing highs right here. So the market was going down, and we started to go right back up, right? So this would be one swing high I'm looking at right here, and this would be another one right here. So let's go. Let's look at the 4-hour. Let's drill down. And okay, so we was right here. So the market blew past this, right? And we created a nice little 1, 2, 3, and then we took it, and it looked like we took a loss on this one. But guess what? It hit the other one, right? And then it gave us a nice little 1, 2, 3 right here. And this 1, 2, 3 was a nice trade right here. So, like I said before, this is an aggressive strategy. You probably don't want to use this at first because you are new to this and you don't want to be too aggressive. If you just stick with the regular strategy where the market goes down below the EMA and you drill down and you drill down to the 4-hour, you will be okay. Now, these aggressive strategy, you can use it, but like I said before, when you first start off, just might as well just use the regular strategy because these aggressive strategy, sometimes you're trying to time the top. So that's how you can actually go and short the market before it goes below the 50 moving average. But like I said, that is an aggressive strategy because you're trying to time the top. Now, if you look at it, when the market's going down and it goes below the 50, you could say, okay, with confidence that the market most likely will continue to go down because it moved a lot. So that's why I told you guys to wait until it goes below the 50. But I'm showing you another option. And because, like I said, I do this full time, so I think it's right for me to show you different options. So that's pretty much it for this video. Also, if you want to hold long term, you can actually do that too. But I mean, with shorts, you probably don't want to do that too much. But me personally, I really think that this market will probably hit either around the 4,000 mark or the 3,000 mark. And I know that sounds crazy, but I think it has a potential. I think it has the potential to go that low. Now let's do a quick measure move. Now, if you notice this move right here, you can measure it. And so our first measurement would be, let me see, our first would be around, was it 44? So 44 would be the first stop. So if this thing goes, if this, it looks like it's going to go down. So if this thing goes down, this would be our first stop right here, around 44. But also, I think that we will go, below that. I think we will go either around the 3,000 mark. So if you do catch a trade, and if you want to trade it and hold it, you can do that, but don't mix it with your short-term strategy. If you're going to do it, make sure that you just have that long-term strategy working, but also you have your short-term strategies working too, because for the most part, when you shorten, this course is about pretty much not holding that much. So when you go in a trade, you looking to at least maybe hold for, let me see, how many days was this? If you was in this trade, you'll hold for maybe this was like 3 days, 4 days. Some trades you can actually hold for a week or two. So just keep that in mind. Like, for the most part, this course is about not holding for that much. You going in and out, holding maybe for a week or two, maybe the longest, maybe a month, depending on how slow the market is. So you don't want to make this a long-term thing, because you don't want to get stuck in a trade. So if you do think that the market will go down lower, then make sure you don't mix that with your short-term strategy, because you can have multiple trades at once on this platform. So let's say you short right here and you want the market to go to 4,000, right? And before it goes to the 4,000 mark, let's say it goes up, right? It goes up. Well, let's say the daily chart goes up above the 50 mark, above the 50 moving average, and then goes back below the 50 moving average. And then let's say you drill down to the 4-hour and you see a short-term 4-hour trade, then you can take that too. So you're gonna have two trades working at the same time. So you can have your long-term trade working. So you will have a separate entry and a separate stop loss for your long term, and you can actually have a separate entry for your short term and separate stop loss for your short term on the same chart. So make sure you do that if you want to hold long term. So that's pretty much it. For me, the way I'm looking at this market is Bitcoin, to me, is weak until we can actually break the 10,000 mark and close above it and continue to make higher highs. Right now, we tried to go to the 10,000 mark, and then it couldn't actually go to 10,000. So right now it's weak. So I'm looking for shorts every single time the market goes up, because I think the market will continue to go down until it hit 10,000. So Bitcoin is the leader. So you can short pretty much anything else as long as you follow the system, and as long as BTC doesn't go above 10,000, most likely we are good, and we can short the market and continue to make money while we're waiting for the bull market to come. So this is how we do it, and this is how it works. And most people can't do this because they so attached to their coins, and they don't know what to do. They want the coins to go up, which we all want the coins to go up, but at the same time, while we're waiting for the coins to go up, we can actually still make money while the market is going down. So that's it for this video, and I will meet you on the next video.